Hey there, Ken Zorvich, NFM Lending. Hope you're having an excellent start to your weekend. So, want to talk about government shutdown. What impact is it really having on real estate and interest rates? So, let's first kind of give a sort of some background of where we're at right now. We're about 2.5 weeks into a government shutdown. From our perspective in our industry, what impact does it have with just operations? Well, keep in mind, FHA loans, VA loans, USDA loans are all government insured loans, which means that the government kind of stamps approval and says if these loans go bad, we insure them and the borrower's effectiveness. So they're still keeping those open and active, with the exception of USDA, which we don't do a ton of loans of that down here. That one definitely is having some serious effects from it. But FHA and VA are pretty much operating. They just are on shortened staff. So some of the information that or tasks we have to do behind the scenes that borrowers and realtors and title companies don't see. Yes, those can be delayed some, but overall, it's not impacting our close dates too much. Could it get worse? Maybe, but let's see. Hopefully, these politicians, come to some agreements here sooner than later. Let's talk about interest rates. What impact is it having on interest rates? Well, the Bureau of Labor Statistics, which I've talked about before, they're in charge of putting out economic data that the market trades on. So some of the economic data they put out is jobs reports. They also put out inflation data. So right now, the economy is kind of flying blind without this information. Now, there's some private sector readings like the ADP jobs report. And also, there's some different websites like Trueflation that tracks inflation data, kind of real time inflation data. But the market still holds this BLS data with a lot of importance. So, right now, we're not really seeing an impact in the interest rate space because of the lack of data. So, we've been pretty flat with interest rates over the last couple weeks since the shutdown has happened. So let me give you an example of where I think we're getting shortchanged. So the week of the government shutting down, ADB came out with a jobs report. They were expecting 50,000 new jobs that were going to enter the market space, and they got negative 3,000. Okay, that's a big stinker of a jobs report. The expectation was that Friday, when the BLS jobs report came out, we'd probably see another stinker. Now, what would this mean? Well, it would mean that we could have seen the bond market get a little bit more active and a little bit more investment in there, which is good for mortgage rates. But we didn't get that because the government shut down, so the BLS never put it out. Now, everyone's been worried about inflation and how sticky inflation is. And is it tariff driven? Is it just market driven? We haven't got any inflation data this month. And that inflation data could have maybe been helpful. Maybe it would have been harmful. Who knows? But this is why mortgage rates are pretty stagnant. Now, what about overall just consumer sentiment? I think right now, the government shutdown, the uncertainty that comes with that, whether it's government employees, whether it's private sector places that have government contracts, or whether it's just uncertainty about the economy, has stunted the real estate activity over the last few weeks because uncertainty can always play a role. You could have the best economic platform for people to buy a house, and if there's uncertainty, they still may not pull the trigger on it. So I do think that this is adding to maybe some sort of built up anxiety of like, oh my gosh, is there a problem? Is my job at jeopardy? Is the economy at jeopardy? So these are all the impacts that are currently taking place. Now, what will we see as we move forward here? I still think we could see some impact with interest rates, and I'm still projecting that they're going to come down a little bit more by the end of the year. I think the Fed is going to meet at the end of the month and be faced with this dilemma of maybe not having this data, and how do they go about making a decision on rate? Well, this Fed has proved to be very data driven. They don't seem to have an outlook of what they want to do. They want to just rely on data. So maybe you appreciate that, maybe you criticize them for it, but they're going to be faced with a tough decision at the end of the month when they meet if the government is not open. So listen, hopefully you found this information useful. If you want to chat about it further, please reach out. Make sure you get in some time with some friends and family this weekend. And as always, I'd love to be in this business in 5 years. If you know someone looking to purchase or refinance, please think of me. Have a great weekend.